Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, today, market on the downside a little bit because of some craziness in the Strait of Hormuz. I can't even remember the name of things anymore. Anyways, 2 ships hit in the Strait of Hormuz. Let's see how the markets have reacted. Well, here you see the treasuries. Oh, hold on, let's wait. I thought I had everything ready, but I apparently oh, it's way too loud. Oh, I'm sorry, guys. There's some pretty sick 808s in this song, isn't there? Okay. And do we have the speakers off? No, we don't. So probably just blasted the blast. Okay. So we're down a little bit. We are starting to make a recovery. In fact, recently here, you can kind of see on the chart a little bit of a... Okay. Honestly, though, considering the news and everything, the market is kind of like not reacting to that all that much in the treasuries, at least. Here's the S&P 500 off of yesterday's highs, but not by too much. Oil only, well, not getting above 70. Gold, silver, both moving higher this morning. Copper, well, it's maybe moving higher, but it's much more congested range over there. Japanese yen overnight. Central bankers denying reports that they are being pressured to lower interest rates. Japanese yen a little improved there, but it's still and the dollar's still above $100. So, oh yes, and of course can't forget Bitcoin. The whole Michael Saylor issue, really interesting to me, because during this time period here, Saylor was selling. I think that his sells were probably these, but somebody else bought. When we opened up yesterday, that news prompting a little bit of selling in Bitcoin, but somebody came along and bought and buoyed the price. So in the end, they kind of worked it out. I think that Bitcoin may range around here for a little bit, but we'll see. Depending on the macro, they might try and stage another comeback, yeah? It's okay, it's epic. Yeah, it's not bad stuff. I would really like Harris to put out some more music, but I don't. I think they've kind of been in an era of self-discovery or something, because they haven't seen a whole lot of content out of those guys lately. Also, can't forget to say hello to Kevin, Belligerent, Ray, Amir, in addition to Ann Steffa there. So one thing I didn't really get much of a read on yesterday. I forget what the numbers were. Well, let's see here. This morning, ADP 24K for the weekly ADP employment change. You don't get a forecast for that one. Trade balance -77.6 versus 78.3. But yesterday, ISM Services PMI, they got a reading of 54 versus the expected 54.2. So right in line with the expectation. I guess why I couldn't get much of a read on it, and it seemed like it just didn't do much of anything, huh? Well, under the surface, there was some stuff going on. Let's come over here. I forget
Block
what's
cell.
what. Yeah, it's this one. Yesterday, SpaceX taking a little pounding. Look at that sell late in the afternoon. Not late in the afternoon, early in the afternoon. They recovered in the end, but whoosh. SpaceX took a little bit of a dive. So I think there's like the current market volatility structure has people a little bit on edge. So that's definitely something to keep an eye on. The other big piece of news yesterday, Flattener campaign rocked by sexual assault allegations. This is a thing that's been going on. I'm gonna be really surprised if this guy doesn't pull out. If he doesn't pull out and Democrats continue to support him, they're gonna have a big problem. Like, problem one, he's still in there. Problem two, that your leaders still continue to support this guy. It's not going to be a good look. So that is a relatively big deal because, you know, that was a winnable race for them, and that changes the numbers a little bit. So you're going to hear a lot about that one. French bond yields rise after Le Pen cleared to run in 2027 presidential election. Interesting. Marie Le Pen can enter the race to become France's next president after judges confirmed her embezzlement conviction on appeal, but handed her a reprieve on an election ban. That probably is. I mean, that one really felt like selective prosecution. You know, like, you dig hard enough, you're going to find somebody made a mistake somewhere. She did make a mistake, as far as I understand. She did do something illegal, but that was kind of trivial. Like, you know, a campaign contribution number sort of stuff, right? But an election ban, I don't know if that was fair. So, reversing that. Okay. Vital. I did my order flow research on cash, S&P 500, NES, NASDAQ, and NQ. It's all rigged. You can't arbitrage markets like it's happening. What do you mean by that? You saying if you take the ES and the cash and try and arbitrage between the two of them, it's not profitable? Is that what you're saying? Because that should have been a given, right? So the thing with indexes is just there's a lot of things to worry about over there. Like here in the treasury, well, you need to know where the volatility is pricing. We're going to have a continued up move. 22 is going to be a pretty key level. 22 is because of the volatility, right? I think if you don't have that number, you're at a disadvantage. you straight up are at a disadvantage, right? And there's things like that in the market all the time. You can't necessarily make money from it, but if you don't know it, you're at a disadvantage. And the problem with ES is that there's like 20 things like that. Where are we in relation to the index? What are we seeing in the advance decline sub-indexes and the volume sub-indexes? What kind of hedging activity is going on? Where are the options gamma? Where are these? It is just too much stuff. And then individual big stocks, and it's... Prints should be different. You can't make a hole in the order book suddenly without... Well, you can. I have an indicator that shows you when that happens. Where the liquidity providers literally pull so fast that nobody can hit it, and so that price goes unprinted. It just skips it. Happens all the time in ES, especially in the overnight session. Pretty rare in the treasuries, but it does happen in the treasuries too from time to time. Should have recenter, by the way. Should also note that there was a little bit of movement in the spreads this morning. Down and then back up. What? I was just reading through the rest of the Zero Hedge headlines. Double tap bombing rips through Damascus near French President Macron's hotel? How do you track that? I just look and see, okay, there was a price. Actually, I don't remember how I tracked that. The exact technical test is... Am I iterating through them? Oh, that's right. It's called hold prices. Ah. Okay, it does it order by order. So it basically says if the last price that traded on the bid was 17. Let's just say it was in the treasuries. The last price was 17, and then the next price is the next order that goes through is more than one tick down from that. So it, you know, the next order is at 16 or below. Then it says, oh, there was a gap there. That's how it does it. Does it order by order. Actually, I should come back in here because it was allowed gap size. So I actually had it set up to allow a 4-tick gap. You can say, oh, only one tick or maybe more than one tick, because if it's only one tick, you put it on like oil, then it's like you just get it all the time. But we were getting it a lot, so I increased it. It's probably time to kind of bring it in a little bit. So we'll do that. See if it prints any. Oh, you can see some over here, right? So this looks like this was mostly in the overnight session, right? See all those little rectangles. Here's one. Oh no, wait, that's in the morning. It's really cool when you get them in the regular session, which does happen. What you're gonna see a lot of though, look at that cluster of them. Jeez. But what you're gonna tend to see is when you get a pulled price like that, it has a tendency to get stuck there. Thought it was liquid enough to not skip price levels? Well, every once in a while it happens. Here's an instance where it happened down here. They moved up, they came back. But it's really, if you get them during the regular session in ES, if you get them during the morning, which does happen from time to time, you'll notice they just come back to that spot over and over and over again. If you were to get one in the treasuries, then we just get pinned to that price almost immediately. In the S&P 500, it kind of like meanders away from it, snaps back, meanders away, snaps back. Right. I read it as a sign of low latent liquidity, essentially. Market makers have decided, for whatever reason, they don't want to trade there. Are you sure that's a real gap and not simply the trade messages updating faster than the quotes? So we're using the fill feed. There can be a little bit of, order differences, but not really. So you could verify it with the market depth too, right? You could say, oh, look, there was X number of contracts here. I saw it cancel, so it went to 0 contracts there. Nothing actually traded. The next trade is over here. But I really don't think it's necessary. It does a good job of showing what we want to see, which is that when you get that kind of a skipped price, it is a strong indication of low resting liquidity, and they have a strong tendency to come back to that location. Yeah, it means there's nobody placing limit orders there, except for the market maker, probably. And then the market maker pulled, for whatever reason, correlated asset, breaking news, inventory management, whatever the reason is, they don't want to pick up orders there. Next trade happens at a price that skips. And like I said, even the treasuries are not liquid enough to completely guarantee that never happens. Does every once in a while happen in the treasury. One of the things when you get into that sort of a thing on order flow, I would be really careful with some sort of a comment like that should never happen, because there's almost always an edge case where it does happen. And when you're programming these sorts of things, you have to deal with those. One of the things that is an issue with some of these indicators, especially kind of the more retail created ones, is that they often don't deal with those situations. So like a more interesting aberration that you get is when there is an order happens in between the best bid and best ask. Like there's a brief momentary gap in the spread. In the treasury, in futures, it's pretty typical that the difference between the best bid and the best ask is only 1 tick. But you will get situations where, and probably you're getting them right now, where, you know, the number of contracts in the middle is really low, and there's a brief period where there's just 0 there. And what can happen when that occurs is somebody might place a bid and immediately get hit by a market order. When that happens, it's possible because your match feed and your market depth feed are not synced, that you get the order before you get the market depth change. So what do you see that as? NinjaTrader sees it as the best bid is 58, or let's see, or where are we at? 75.82, and the best offer is 75.82 and a half, but an order went off at and a quarter. So how do you determine if that was a buy or a sell? You can't. So the way that most retail indicators do it is they just discard those. They just say, well, we don't know. It doesn't happen very often. They don't add it to either side. Talking about locked markets? I don't know what you mean by a locked market, but... I mean, like, if we were to do it in the treasuries, you would have a best bid like this, and you have a best offer like this, right? So there's a gap. There's no liquidity on either side at this middle price, but then you see an order happen there. Which side was it? A lot of indicators just discard that. Happens occasionally in the treasuries. If you're doing equities, though, if we had a DOM of equities, what a lot of equities will be like is it'll look like this. It'll be a huge gap between them, right? There'd be a huge gap between them. And a large portion of the volume actually happens inside of that best bid, best ask. And so what's happening is somebody places an offer here, and then the robots see that and immediately pick that order off. It happens a lot in equities. So the way that most of our futures trading platforms try to sign orders, they can't figure it out. So again, they just discard it. You can look at stocks on NinjaTrader, and you can even look at order flow with stocks on NinjaTrader using DX feed, and they have this whole add-on and everything like that, right? I have an indicator that fixes that. Because if you look at cumulative delta, normally in a stock where the majority of the volume happens in the spread, it's just not going to make any sense, because it's just it's either random or it's discarding everything. So the numbers that you get don't make any sense. But my indicator, what it does is it says, okay, I saw an order go off at this price. I'm going to wait until I get the market depth update to see whether it was a bid or an offer at that price. So it creates a little window around that order, and then it searches for market depth events at that price equal in size to the amount of volume that transacted, to determine whether it was a bid or an offer and sign it. Plus, there's a couple of other little rules that help, like looking at the trend and all this sort of stuff. I understand the platform's in for that, but doesn't the exchange have the information exactly that side type information? Well, so that's where it gets kind of weird, is that, I mean, technically they do, but in practice, I would say that they don't. Because the exchange doesn't, they don't go through all of the effort to fill in every little kind of piece of data that data providers would want and all of these sorts of things. Nah. Like, they have the data to construct it. That doesn't necessarily mean that it's being output anywhere. You know what I mean? But, for instance, with Rhythmic has aggressor. So, Ninja Trader does not take advantage of this. I don't know if any of the existing retail platforms specifically use this feature of Rhythmic or not. Just because if they're doing it, they're not saying. But my platform does. There is an aggressor. Every order that comes through has the aggressor set on it. And so I can just look. So when you get in my platform, which I should pull up and fix. I added some stuff into it for licensing and then didn't finish it. And we did a little bit yesterday, but I think I have to redo it. I need to start it up, get a key, give it to ChatGPT to test, etc., etc., etc. But anyways, when you look at the cumulative delta on my platform's charts, that's 100% accurate because it's signed by Rhythmic. Just thinking about the treasury, do I need to do anything here? As of late, I've been way too hands off, right? I should be taking more trades. Should be making more TikToks. I was just remembering, I don't know why it hit me. Kind of as I was waking up / in the shower. But I was remembering I made a really good video. I really liked the video for whatever reason about the problems with auction theory, how it was a good theory, but that our empirical findings since then falsify the theory. Specifically, the idea that the price with the most volume traded represents some sort of concept of fair value. It doesn't. It usually happens because of low latent liquidity, which doesn't really mean fair value or agreement at all. It means nobody wants to touch it. But that's the ironic thing, is that then it ends up staying there for so long, it becomes the point of control. So I had a video, and somebody commented well, you're saying that everybody else is wrong, but then how do you prove that you're right? And I'm like, I didn't respond to them. I kind of forgot, and I keep being like, I really need a good, clean time to make a video and stuff. I really shouldn't. I really should just make a video every day, no matter what. Anyways, but when I was reading the comment, I was just like, what are you talking about? I showed you the study. You watched the whole video. I'm showing you, listen, hey, the reason we know this is true is because there's quite a bit of research about it that shows. You don't have to take my word for it. So I need to respond to that one. That's probably the best. I always was like, if there's a comment I can make a video about, I always do those first. Because here's the thing. I every day now, I will come across some new trading influencer on TikTok. And I find the way that a lot of these guys try to approach the contents and the community and everything a little funny. I understand why they do it. They do it because it matches the expectations of everybody. Everybody expects, I'm going to learn how to trade. So they think that learning how to trade is going to be like the way that they learned everything else. that they're going to sit down in a class and they're going to learn a couple of things, lectures from the teacher, and then they're going to start applying it in exercises or maybe even just out in the field. And then the guru or whatever is going to go through step-by-step examples with them and whatnot. And that's just not the way that it works in trading, because there's so much that you have to learn, and almost all of it has to be learned by experience. You can't really learn it from a textbook. There's a lot that you could learn from a textbook, but doesn't exist. Doesn't exist. Haven't had the time to write it. But the one that really drives me crazy is when they come in and they're like, I've been trading for 10 years. And I'm like, Cap, number one, like, you've been trading for 10 years. I've never heard of you. This person, all of a sudden, they're just this amazingly successful retail trader that's been doing it for 10 years. I call bullshit. But then they'll start talking, and it's immediately clear that they don't know anything what they're talking about. It genuinely upsets me. And part of the reason why it upsets me is because I can go and look at the things that I've done, and I outclass these people in every respect, right? We have had periods of profitability where you don't lose a single trade in a month or in several months. We have periods of profitability where it's not just that you hit a really high win rate, but that your favorable excursion is more than your adverse excursion at the same time. So you're actually making more than your risk. How do we do that? Because we're informed traders. We have an understanding of the markets that's based on empirical data that far outclasses by 2 or 3 levels the vast majority of what these retail trading gurus out there are teaching. And then on top of that, I haven't just been doing it for, like been in the markets for 20 years. I've been trading futures for 10 years, been trading it this whole time on a live stream live. You can look at every session because we almost never miss a session, right? I have a group of guys that are here every day, the same group of guys for almost that whole time, right? We have a lot to be proud of, but I don't spend all my time on social media bragging about that stuff for social proof. Why? Because it doesn't matter. None of those things are a reason why you should follow somebody. Hey, maybe they really had something and they were a really good trader, but past performance is not indicative of future results. So it's literally there in the disclaimers that you're required to give by the government, right? Past performance is not indicative of future results. So what does matter? Can you prove that the behavior they're talking about really does happen in the markets by looking at the market data? Can you prove it empirically? And everybody should be able to look at the market and see that behavior. And the things that I talk about, things that I make videos about, there is always a study that I am basing that on. Of course, I try to take it a little bit further than what the study has, right? Okay. Trying to get you to think about, okay, here's a study. How might I use that to my advantage? Because the study usually doesn't spell it out for you, right? Okay. But there's always a study there. You should listen to me because I give you empirical data, and none of these other gurus do. There is a new class of guru that is a quant trader, but those guys don't help you because their position is basically you should never trade. You're just wasting your time. I'm super, super smart, but you're not, so don't even try. I think those guys are going to be wrong too. Like, don't get me wrong, trading is really hard. Most people are going to fail. I think that the way that the market is structured, a zero-sum game, most people have to fail. But if you have to put in the effort, it is absolutely possible for you to make it. And that as time goes on, retail traders are going to get better and better. I'm making you more powerful tools, And part of what goes along with more powerful tools is I need to help you develop a more solid understanding of the markets. But as the retail traders level up, I think that they're going to start discovering and understanding some of the things that a lot of these quant firms like Renaissance Technology are taking advantage of. And at that point, it will be an advantage to the retail trader because it's just you. You're trading small. You can get away with just about anything. And for these big firms, all of that headcount and systems and data that they're using will start to become a burden on them. Over a long enough horizon, the retail traders are going to win. So it really bothers me also when I see these guys. They're like, no, none of you are ever going to stand a chance. You're not so smart. Have you listened to the new market? No. I haven't read much from the Market Wizards books at all. I mean, I probably should, but my whole thing with the Market Wizards book is that everybody kind of use the Market Wizard books as like their Bible that basically says holy grails are out there and you just got to go and find them. And so everybody is out there taking an approach from trading based on stuff that they read in the Market Wizards book. And the truth is that they left out some really key details that completely changed the story. And so a lot of people are out there trying to do something based on what they think should work because of the Market Wizards book that is a complete misunderstanding of what those traders were doing. What's this? When a trader trying to make money by something outside trading, proving that it's not an easy job to do. Yeah. I mean, I think the thing is, eventually the retail traders will win, but it will probably always be tight, if that makes sense. So retail traders have this conception that, like, I'm going to come in and start trading and I'll make tens of thousands of dollars, and that's how I'm going to build my wealth and become a millionaire. And sorry, it just doesn't work that way. If you get lucky, this is what you should do, right? You go and you trade this again is another one of the things that I see that as kind of like has me like, oh, these people have no clue what they're talking about. Okay, you come in and you're trading. Maybe you're trading a prop account and you start making tens of thousands of dollars. So you make hundreds of thousands of dollars in a year. You should not be going out and buying Lambos with it. You should start swing trading with it. Build up enough capital to start doing swing trade strategies and other kind of quant stuff, right? Start doing position trading. The place where like the real money is made. And they don't do that. They never scale up or move beyond. Probably because they only have this one signal or they don't really understand what's going on. So they can't do those sorts of things. How about Jesse Livermore? Jesse Livermore killed himself broke. So it's kind of hard to determine, did Jesse Livermore really have an edge there from reading the tape that, all of these sorts of things? Maybe. But the big thing that I see in Jesse Livermore's history is that he just got really effing lucky. That basically he had himself leveraged massively short at just the right time. Basically like 2 or 3 times. Like a big one that he tells in the book, and I don't know how true this is because, the book is not necessarily a biography, but he was massively short and then went on vacation and earthquake in San Francisco happened. Which the earthquake that he's talking about was massive. It completely leveled that city. Big deal. You can get tons of money off of that, right? And the thing is, one thing that happened to him, for instance, he started having some success. So then he thought, oh, I will go and I will trade sugar. And these other traders kind of played him. And, oh, I'll show you all this stuff. And you get into it. And then they basically traded against him. Right? Like, oh, I think one of the reasons it's valuable to read reminiscences of a stock market operator is because it shows you this deeper truth that we keep trying to get across to people that for some reason a lot of retail traders don't believe, which is that orders have a significant impact on price. Like, we're taught in school that markets are perfectly efficient and blah, blah, blah. You can't come in and buy up a ton of something and manipulate the price because the market will know that that's not the real price and it'll come back. It doesn't actually work like that. Somebody has to come in and trade it the other way, and most people are hesitant to do that because it's moving against them. So nobody steps in and trades it back to fair value. Because the reality is nobody really knows where fair value is. So in the book, he gives multiple stories where this happens. He shares one story, the one that I just told you about, where his position basically gets too big and they squeeze him. Right? So he didn't factor in his impact and got himself into a pickle because of that. He shows instances where, somebody can come in and progressively buy something up in a way to attract retail traders and get a bunch of people into it, into a particular security, purely so that the big owners of that security can get out. He tells a story about that, right? Your orders have impact. And that's kind of the deeper truth here. And once you realize that the orders have impact, like what's really going on and how you have to operate because of that becomes much more clear. But for some reason, retail traders don't see that. They don't want to believe it. The Boy Plunger Google voice transcription is terrible. What are the best trading movies? Well, I think that the best finance movie is It's a Wonderful Life. Really, you think about it. It's a Wonderful Life is a story about economics. And you see a guy who lived through from before the Great Depression and all the way through the whole time that people at the time had lived through, showing the economy and what he had done during that whole time. And I say that it's the best finance movie because it shows what, if you really understand the way that the markets work and you really get deeply into it. I saw this guy on TikTok the other day. I can't remember his name, but he was a British guy. He was doing some interesting work on housing. But he said, when you look at the markets, it looks more like physics than anything else. And his take was like, I don't know what to do about it. It's really, how do people respond when they really understand the truth of the markets? Because a lot of these smart people don't know what to do with it. But I think that It's a Wonderful Life ultimately has it correct. That sometimes things can get screwed up and that we need good people to come in and individuals to make good decisions in spite of the market conditions. That's what It's a Wonderful Life is about. That's why it's the best finance movie. The best trading movie? I mean, there's not really a lot of movies that are really truly about trading in the way that I would make a movie about trading, I need learning entertainment. You know, like, so for instance, a movie that really, really shows a lot of what trading on the commodities floor was like, and the way that that whole world is like, was Trading Places with Dan Aykroyd and what was the name of the? It'll come to me later. Oh, Eddie Murphy. Eddie Murphy. Which, by the way, is like contraband. Like, you will not, it's hard to find that movie. I have it on DVD. It's hard to find that movie because it has Dan Aykroyd in blackface. And there's a couple of scenes on the floor, so you can kind of see what it looked like. And there's some other things about the way that that people lived that I also think was kind of significant. Like these guys that because basically in the movie he basically becomes head of a commodities trading advisor, essentially, right? And most of what he's doing is just being an interface between clients and the market. So there certainly were, and maybe even still are, people out there that, you know, they can make millions of dollars, and what they actually do is really kind of more paperwork, you know? And then you have a house where all of the furniture comes with the house and all of these sorts of things. Yes. All of the amenities that make your life easier so that you can focus on that job. Yeah. It's interesting, but is it really about trading? I don't know. The Big Short. Is The Big Short about trading? Well, it's kind of more about how things work in a big firm. Because in The Big Short, well, let's hear. Which one are we talking about? The Big Short. No. The Big Short. I guess The Big Short was about trading. But it's really more about the housing market collapse as a whole, right? I was thinking about Margin Call. Margin Call is interesting because it's basically, even though it's like a fictional firm, it's basically about how Goldman Sachs figured out that the market was at big risk there and that they needed to dump a bunch of securities, and they did it. Yeah. Except for that, the thing that's different, the truth of that story that's different from Margin Call is that in Margin Call, it was just like they were working on a spreadsheet. No, I finished this model that this guy had, and now I realize the truth of it and everything. Nah. At Goldman Sachs, they have a system called SecDB, which is a relation. No, sorry, it's not like a relational database. It's like an object database that has relations between objects. So you can price one object, and then you can say, okay, what is this object priced based on the price of this? And then it just kind of filters out through everything. It's super, super complex, and it requires a lot of compute. But it basically allowed them to analyze the value of all of their securities and do stress tests before anybody else on Wall Street had the ability to do that. So it was actually, they were able to get out ahead of everybody else because of a technological advantage. There's a series. I can't remember what the name of it is, but apparently there is a series about like a quant firm or bank or something like that. $1 Million Traders, maybe. No, it's not a reality TV show though. It's fictional. But that one went way. I've only seen clips, but that seemed to go way more into like real trading and how things really work at organizations like that. $1 Million Traders. Maybe I've seen it, maybe not. Hi Seth, looking at your ESDOM, your orders are a lot bigger. Yeah, so the reason that they're different is because I'm using tick aggregation. It's a setting in Jigsaw here when you open up the search window. Sorry, tick multiplier. So you notice that I don't have every tick right? I don't have 0.25, 0.5, 0.75. It just goes 79, 80. So I'm actually combining 4 ticks together. And I do that because I don't keep that close of an eye on ES. So kind of aggregating things together gives me a higher level view and allows me to keep track of ES a little bit better and not have this rabbit hopping up and down all the time in the corner of my eye distracting me. $1 Million Traders is a 2009 British reality television series devised by hedge fund manager Lex Van Dam, which attempted to recreate the famous Turtle Traders experiment devised by Richard Dennis. Yeah, well, like this is what I was kind of hinting at before. So what were the Turtle Traders? The Turtle Traders were swing traders. You gotta understand this, guys. When you really understand what momentum is, like what a momentum strategy, how it really works and why it works, it very much changes your view of trading in the market and the things that you see people say. So it's just a really important thing to understand the history. So what is a swing trading? And I have a video about it, how momentum strategies really work. But the gist of it is this. If you look at a single asset on an individual day, there is a limit to how far it can go. Like, yeah, there's what volatility is pricing. They can outperform volatility. But there's this point at which the market becomes unhinged and basically like falls apart. The market makers completely pull their liquidity. It's basically a crash. And when that happens, it can't push any further. Right? It's an issue with the order book. So the reality of it is that probably the best you're going to get on a risk reward basis in day trading is 10 to 1. Like you could get a trade where you make 10 times what your loser is, and they're exceptionally rare. Like in a single asset, maybe it happens once a year. Okay. So the math doesn't work out at 10 to 1. Just, it doesn't work out. But if you hold something for months and months and months, or maybe 2 or 3 years, that's where it gets crazy. Because with the leverage that you get in futures market, you can get trades that are 100 to 1 or even more than that. So basically, the way that the Turtle Traders worked is that they said, okay, here's what has to happen when there is a change in trend, right? Like if we're going down and then we're going up, there's this, and you have the moving average or whatever, right? The moving average is going to turn up like this, right? You basically can say, yeah, they have to do this or they have to do that. The most common way of doing it that I've learned at least is that, you have a stock and then when it does this, and if it's like a 50-day high or whatever, you trade it, you go into it, okay? Does a stock breaking its 50-day high accurately predict that it is going to continue forward? No, it is not a predictive signal. But when it does, you hold it, that's where you get 100 to 1, and that's where the money comes from. Okay, so 2 key takeaways. Momentum is a moment. 3, let's say 3. So there's one thing that I forgot to mention, which is that you can't do it off of a single asset. You have to have like a universe of assets and look at the correlations between those things, right? Okay, so key takeaways. 1, momentum is done across a portfolio. 2, it's done on a higher time frame. It's not for day trading. 3, It's not a predictive signal. Okay? So now that you know all of those things, a lot of the stuff that retail traders want to do seems kind of silly. The turtle traders, they made money because they were just consistent and focused on their strategy. So that's all I've got to do is I need to pick my individual signal in day trading and just follow that. It's not going to work because you're breaking all of those things. You're looking at a single asset. You're not holding positions for multiple days, and the signal is not actually predictive. Right? When you come into a day trading basis, it's a different game. And there are really two games in the day trading basis, okay? One is mean reversion. So on the longer time frame, there is a tendency for markets to trend. On an intraday basis, there is a tendency for them to mean revert. Unfortunately, as far as I've seen, doing mean reversion with outrights is not very effective. So if you're going to play the mean reversion game, basically what you should be doing is selling options. Right? That's the day trading game for mean reversion is selling options. And then the other side of it is predictive signals, which is where you combine all of the important things that we know about. I got to pull up this document.
Block sell.
Once a day. Breaking news, specifics about your instrument, correlations, volatility, order flow, macro narrative, and risk management. You've got to combine all of those things together to stand a chance retail day trading. It's a different game than what everybody's told you. Why don't you swing trade? I should. But a couple of reasons. Number one, I think that for me to swing trade, I would probably need to be able to be at my desk and to monitor things a little bit more closely than I have the ability to right now. Is the big one. And then the other big one is I think to really do well with the swing trading, I would need to have a much bigger wad. Like I think that I would need to put like $20,000 into it or something like that, which is just not something I'm willing to do right now. Otherwise I probably would. And you know what? I'm not even sure if I would swing trade. I would probably do more like position trading. Farage just resigned? That seems odd to me. Why would he do that? Oh, I'm quitting Clacton MP. I will force by election. I will run as MP in by election. Isn't it the opposite of day trading in terms of being glued to a monitor? Well, you don't have to be glued to a monitor, but I really don't want to be the guy that's like, I've got a good swing position and then the market shifts because of, something happened in the Strait of Hormuz. And by the time I get to the computer to do anything about it, I've already lost all my profits. Like, I don't think that I would need to be glued to the monitor, but I think I would need to be home. Like, I think I would need to not have other distractions. I think that I would probably have to spend quite a bit more time doing the quant stuff. I think another thing is that the tools available to you out there right now are really there's just a lot of issues. Basically, what happened was there was a company called Quantopian, and their idea was, we'll give retail traders these tools to do real quantitative work, and then a platform platform for them to show off the performance of their strategies. And then we'll take the best strategies and make money from them. And it never worked because the truth was, one, I don't think that their tools were that powerful. And the retail traders never really found anything. So they went out of business. I still think, in the end, the retail traders will win. So maybe Quantopian was just too early. Okay. But the problem is that a lot of the platforms and stuff like that built for quant traders was based on Quantopian. So when they went out of business, all of those libraries stopped getting updated. I'm running out of space. I need to come in and clear things out. Mm-mm-mm-mm-mm. 91 items. Wow. So when that happens, especially on the Python side of things, everything kind of like split up. So like there's lots of tools out there, but they're like all different and just a big mess, right? And then you got something going. How do you switch over to actually like automating and running it? Hard. So that's why I'm building my own platform. And once I get the platform to the level that I want, and I think it'll take many years before I can do this sort of stuff. But, the first key thing is to just get the platform to do what my other platforms do. So make it so that I can replace NinjaTrader. I actually think that I have a good chance of being able to get to that point before the end of the summer. Then, next step would be execution. I think I would probably still run Jigsaw, but, I'd run them side by side and, test trading for a while and see that it works on those sorts of things. Then it would be getting into the back testing. And the first step would be your intraday back testing, similar to what NinjaTrader has. And then the next step would be portfolio level back testing, which you can't do in NinjaTrader. So once you get the portfolio level back testing, that's where some of the things that I'm aware of, where I really think that we could find a really strong edge, are available, right? I have found short-term signals, but like you really, really, really got to be fast. And it requires a lot of infrastructure for it. So I haven't put too much time into those. And there again was a place where like I have to incorporate machine learning to really make them effective. And you can't do that in NinjaTrader you're right. So here again, the platform will do it. So I've done a lot of quant stuff. We've found some interesting things, but not anything that I really think that you could reliably execute on and just do that, right? I do wonder if there are some things where if you're doing it on a prop firm account, the latency doesn't matter as much and you can get away with some of these little arbitrage sorts of things, but then they won't. Maybe that's why there's a lot of prop firms that will deny payouts and say you were using an algorithm or something. Okay, so there was another one. Amir says Ukrainian drones have struck 2 more Russian Shadow Fleet fuel tankers in the Azov Sea. I don't know if that's really a market-moving headline, but it continues to go there. At what point do they have to... Does Russia have to change something? I feel like they're already past the point where Russia needs to change anything, and they just don't know what to do. I don't know. There has been a decent decline in the treasuries again. Is oil spiking? Yes, it is. But it was only off a little bit from where we were at 17, so probably regular session minus 1 sigma the target. My ping with Chicago is 180 to 200 milliseconds. Oh, that's bad. That's relatively bad. Well, I mean, if you're discretionary trading, I don't think that that's going to make a huge difference. If you're a quant trading, it would definitely be like, yeah, well, you go get a co-located server. Kind of a funny thing that's going on because a lot of businesses have said, oh, why don't we just fix that by having a web platform and all of the execution happens on our servers, and so you get better execution that way. But from what I've seen, retail traders aren't into those platforms. That they feel like that you just get too many problems with it being a cloud platform. They would rather manage the software themselves, and they would rather go and buy a co-located VPS. See the Tom 200 milliseconds, and then my button press will arrive at another 200 milliseconds. So an order comes in, you see it, and then you have to add, a few milliseconds for you to react to it, and then your button click, and yeah. But like again, discretionary trading, like I think that if that amount of speed really makes a significant difference to the performance of your strategy, as a discretionary retail trader, you're trading the wrong strategy. That is a strategy that should be done by a robot. Right? Like if it comes down to reaction. Or algorithmically assisted, right? You can come in and you can say, okay, I want to take a long, but you wait for the appropriate signal to take it. $50 trades a day. You're crazy, man. But that sounds to me like a strategy that is probably the wrong strategy if you have 200 milliseconds. I don't know. Is this sort of a thing where you truly scalp and you take a large number of trades a day? As a person, a human, still practical? Because it seems like it could be. And I see a lot of people trying, but I at least in futures, I haven't seen somebody really successfully pull that off in the long term. So I'm starting to browse around the rest of the internet. This guy says on July 6th, I'm no macroeconomist, but there are a lot of 39-year-olds grinding leak code at Starbucks right now. There's a lot of displaced computer programmers right now. Can't replace human with, well, a lot, like I said, what happens is you say, I know that I want to get long, but I'm just letting the algorithm pull the trigger. Gold and silver being successful, really? Well, I had gold had a good move this morning, but I know it's been a really long time since I've tried to watch the flow in gold. It's a different beast for sure. Wish I would trade some of those. I don't know, man. I think that to get me to trade one of those instruments, I would really have to have some sort of empirically proven edge that really strongly, I would felt really strong as like an edge and that nobody else has. I don't know. Otherwise, I just don't see how I would gain a better understanding of that market than the treasury market, and how that market would provide me more opportunities than the treasury market. Quarter 2 2026 results. Samsung overtakes Nvidia to become the most profitable company in the world? Really? Oh, is that because of memory? Do you have that edge in ZN? I think that in ZN, my ability to understand that market combined with all the little tiny details that I know about it combined together into an edge that in very niche circumstances I can get good trades. Nah, be a degenerate, open a 1K account, and let's go gambling, trading live responsibly. I mean, I suppose I would be willing to go into a degenerate gambler kind of a strategy if I had an interesting enough back test behind it or something like that, For some reason, props didn't allow you to trade metals for a few months. I'm honestly surprised that there hasn't been a prop firm come out and say, we only let you trade ES and NQ. Like, seriously. I really genuinely think that that's what they want you to trade. They just want you to trade the equity indexes because they don't think that there's a real edge there. That's where they make their money. Not with oil. Too many people. With oil, you get too many people that get lucky that month and you have to pay them out. Let's see here, because metals are real and the props are not. I don't know. Everybody keeps telling me that what happens on the metal futures isn't real, though. That it's paper golds, and that it's manipulated and yada yada yada. Really, Top Step fired 2 influencers who were. Why do you think they did that? Just they weren't performing or bringing people in, so they got rid of them. I really wonder how those guys decide to pick somebody up, and yeah, did they go over there like, okay, we need a new influencer to push our prop firm. Who could we do? Well, I really like Speculator Seth's content. Yeah, but he hates prop firms, so we can't use him. Well, how about this person? I like, because there's always people that I don't know. It's just, I guess at this point the trading sphere just moves too fast to keep up, right? It used to be I was literally the only person that did it, right? That's again one of the things that kind of will, you know, make me mad. So we've been doing this for 10 years, and then you get these other people that they claim that they've been doing it that long, and no, you haven't. Because I was the only one that did it back then. You weren't there. You weren't posting YouTube videos 10 years ago. Come on. I guess what I'm really saying is I would never become an influencer for a prop firm and do like a daily segment and, you know, get paid by them. But I would love for them to ask me. Too, in the same time, very suspicious, cheesy reason. Well, but you know what, Vital? I'm gonna bet you that they don't have very many people trading. It's just like with the treasuries. Like, one of the things that I used to do, Top Step would go through and post the winning combine, like everybody that got funded. They would post everybody that got funded and like a spreadsheet of their trades or something like that. And there was a time period where I would go through every month and look at what they were doing. And what did I find? Almost without fail, they were trading the S&P 500 or oil. The number that I saw, they were trading metals very, very low. And trading treasuries, I don't know if I ever saw it. So, like, that was one of the things that like really initially turned me off to prop firms, was realizing that, okay, in order for me to trade the leverage that I think is appropriate, I really need to size in the treasuries. But if you do that, you don't really get enough leverage to pass the combine in a reasonable time. So the combine is designed, the numbers are put there to force you into over leveraging and doing things that there's no way they're going to be successful long term. You're always going to come into a bout of volatility that screws you over. But There's very, very few retail traders that are trading stuff outside of ES, NQ, and CL, especially on those prop firms. Seth should put a since 1969. We could do it since 20. We should have a, speculator Seth crest, hoodie sort of a thing, like it was a college, and it can say since 2017. Yeah, that'd be. We could do that. I'm into it. Or they couldn't actively trade against the metals, so if that's the case, you got to get rid of it. Isn't that just about why they got rid of indexes recently off of? No, they didn't get rid of indexes. You mean treasuries. I think the reason that they got rid of treasuries was because you can cheat the combine because the simulator gives you fills. Gives you fills when it shouldn't. And in other instruments, it doesn't matter as much. But in the treasuries, you could literally pass the combine just from taking advantage of the way that the rhythmic simulator does fills. And what happened was somebody came and made a robot that did that and passed the combine, and so that they made the rule. And then they said, well, we weren't really getting anybody doing it that way anyways, so they got rid of it. You know what's funny is that if I had gone into it, I really do think it would have changed the community. Like if I went all in on trading combines and I said, we're going to trade CB and we're going to pass trading combines. And they did it a few times and people, and I'm just doing nothing but hawking subscriptions to trading combines. And I became a millionaire from that or something like that. I bet you that there'd be more people trying to trade prop firms. And then it'd be a bit bigger issue and maybe they wouldn't have banned it. Because one of the things that I see is that as soon as I come in and I say I'm interested in playing in the micro treasury yield futures, because you look at it right now, there's only been 2, 4, 8, 9, 29 orders in the micro 10-year. And I'm not touching it. But I guarantee you that as soon as I started putting orders in there, that the activity would go up and the volume would go up and stuff. It's like me and like 5 of you that are listening that all also decide to get involved is enough to change that market. Are props like CFDs or are they really hedged now? I talked to a guy in Utah that was trying to make a prop firm. He was kind of working through somebody else. And I don't know, maybe he decided that these other guys are just not trustworthy. But his whole idea was that they would really hedge. And I was sitting there like, that's not going to work. If they don't, they would be very illegal soon. Well, but that's the whole thing, Vital, is that there's lots of things that should be illegal. And it's not until it becomes like a national headline that Congress ever pays attention and does something about it. Probably. I don't see the difference between prop firms and bucket shops. I think that they've basically just found a kind of loophole to recreate bucket shops. Yeah, if they crossed a certain cash volume, maybe. But look at the world. It's not. It just hasn't been going that way. A lot of it depends on the current administration, which is also kind of a irritation of mine. But I think the reality of it is that people want to take risks. Americans want to take risks. That's what made this country what it is. And so we have people in this country that have a higher propensity to take risks. And the culture has started to trend towards a more feminine culture that very much despises taking risks. And so what you're seeing is guys aren't really given enough opportunity in their daily life and in their jobs and so forth to take risks and try and be successful, that they are now turning to increasingly more exotic ways to take risk where they can actually do it. That's why you see so many men go into day trading and sports betting and all of these sorts of things. People say, it's because the economy is so bad, and actually maybe it makes sense. That's the only way that you can make it big is get lucky. Yeah, but then wouldn't they put it all into things where you would actually make money and stand a chance at getting lucky rather than day trading where it's like a 95% chance of losing? Come on. That's why I think a lot of it has to do with the risk. It's the combination of the risk and the barrier to entry. Oh, I forgot that we lose Fable tonight. Tonight, midnight Pacific time. Is this gonna be like Napster? This is gonna be like Napster, isn't it? Where using Claude is just gonna be unusable tonight because everybody's gonna be trying to get their last, Fable in. Last Fable usage in before it goes away. Hatched freaking headline. Well, I did hear something about the Strait of Hormuz, but I thought it was a redo. You must be talking about something else. We do have some news here at the top of the hour too, don't we? Oh, it's just the EIA report. Or no, not the EIA Canadian IVPMI. We do get in an hour New York Fed inflation expectations. That's an important number for us. I'd call it kind of more of a B tier number, but so, coming into today, my thinking was, well, Strait of Hormuz is going to push oil and treasuries are going to sell, which is what has happened. But I said, I don't think it's worth getting involved because surely the administration will come in and try and stop the bleeding, right? Apparently not. It's still going. Look at that. Well, here's R-1 sigma. There's the target that we mentioned earlier. And after headline, I never know what to do. You can't treat those prints on the headline seriously. Well, well, you know why? Is because you get like the reaction to the news, and then you get maybe flows that come up afterwards. I would say that like larger flows that really want to trade off of that news or reposition because of that news is rare. And so what actually happens afterwards is that the other flows that were going to come anyways come through. Oh my. They're very upset. They slipped through that very quickly. Next set of targets down in the 08 range. Get rid of that. This is not the best place to take a continuation, but it's not stopping. It'd go up, I say, let's gamble my imagine. I really... You know what? I think that part of me is just you get stuck into a routine, and my routine right now is coming up with an excuse for why I shouldn't be in a position. Because I could totally be short this, right? Anything from 17 would have been good, and it was there for a long time. I just don't like trading these oil headlines. You know what, though? I'm not sure that there actually is an oil headline, to be honest with you. I think it's just oil is bouncing out, and that's why treasuries are moving. VWAP reversals. Well, I'd be really careful because they sliced through the volatility levels a little bit too easily. It looks like they're going to come back to it. maybe there is a reversal here, or maybe we just saw the low. I mean, there was some real volume behind that too. It's a good 20,000 contracts crashed through. But if it's oil, and who knows how far oil can go, and then the flow in the treasury will just keep going. So I think the result is you get a very high risk, low probability trade. Right? Like, it could come all the way back up here. It could go to -2 sigma. It could just stay here at -1 sigma. Regular session -1 sigma. But your ability to predict which one of those it's going to be, I think, is really low. Because, again, it happens every time. It's going to happen, man. Trump's going to come out and say something. Yeah, well, we need to respond to it and everything, but we're still hopeful that peace can work and blah, 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 right? This isn't even the first set of ships that have been attacked by Iran since we started the Memorandum of Understanding period. And the market blew it off, right? Like that day, Trump said something and then they all just went back. It doesn't matter. No, never mind. We're trading this now. So that's why I'm like hyper skeptical of trading it. This spot looks like a good spot for a one ticker though. Especially if I'd had the alligator. Take it as she goes at 15 and then have an order waiting there at 12. Let's see if they fill it. It's like the USA playing soccer today. Dude, I finally had a chance to sit down and watch a soccer game. And oh my gosh, they were terrible last night. It was so bad. Yeah, okay, so you'd be filled there. I remember people saying that like Belgium was probably favored, but it was a real blowout, man. Like I think some people might say, well, you know, the politics got involved and all this was kind of at play. I don't think that's it. I think that the Belgian team totally outclassed them, and that once they realized that, they just fell apart. Hormuz is just an excuse for a shift in order flow. It's definitely, well, I mean, there's real flow coming in. That's for sure, but I called that at 11.5, 12 pretty good. I don't know if that particular setup is like a really like reliable good one, but it's something that I just can't help but see, and I like. Germany is out, Brazil is out, USA still holds. Wait, no, how does that work? They're out, right? The USA is out. They lost. I thought that this was like France versus Spain is going to be the final. Yeah, that's what I heard. Is France.
Block sell.
Oof. Keep an eye on oil right here, because it's reloading right there. So my news squawk just came across, and it's like futures extend their gains, and I'm like, what are you talking about? The S&P 500 is NQ is almost down 2%. What's? And then he says oil. I'm like, oh, right, you're watching oil. That makes sense. You know, this whole World Cup thing, though, has kind of reminded me why I don't like the World Cup. It's just like FIFA seems like an incompetent organization to me. And there's so many rules in soccer that just seem kind of dumb and not equally applied very well. And that's the thing that I just can't stand, is when officiating really changes the outcome of a game, you know? So this whole thing where they like gave him a red card, and should it be a red card? And then I was reading all this stuff that they were saying that a red card is not an automatic ban, and that they weren't rescinding the red card, just the ban based off of the red. I can't even keep up with it. It shouldn't be the rules. Like, you're treating it like it's like the equivalent of a flagrant 2 in basketball, when it's something that is just bound to happen as people are battling over the ball. And then they have this whole thing that's like, they allow people to be rough and to jockey for position and push each other and things like that. But then if somebody appears to be hurt, then that all goes out the window. You know? It's like they want to be a rough sport like hockey without actually being that. You know? In hockey, the way that the rules are set up in hockey, there's all sorts of stuff that doesn't get called that could, right? And the officials are pretty good at, you know, well, we want to allow people to continue to play. And so we're going to overlook that kind of stuff when it doesn't really matter. You know, that sort of a thing. And I would say that overall they do a pretty, at least relative to other sports, they certainly still have their controversies, right? But in my mind, soccer should be one of the sports where like the officiating matters the least. But in practice, I don't think that that's really the case. And like, here's the thing. If they came in and they said no contact in soccer, there's no contact, would it change the game that much? I'm probably saying something really ignorant. Because I don't watch soccer to watch them be rough, you know? Like, that's all I'm saying. But mostly, I just can't stand the whining on Reddit or social media in general. It's just whatever happens, it's a bunch of whining, complaining about FIFA and stuff. Oh, okay. The treasuries are recovering here pretty nicely so far. Oil is backing off. There's a picture somebody posted. Total compensation $570,000 a year. You know what? Like I've passed up opportunities or not pursued opportunities because I didn't want to move out of Utah. For 570, I think you could convince me. Well, it wouldn't be me that you would have to convince. It would be my wife. Hey, honey, we'll make 5 times more. Everything will cost 10 times more, but you know, build up a little bit of home equity, move back, and we're old. Totally, it'll totally work out. We could totally do it. I wouldn't mind. No, well, I have issues with every company, but Anthropic seems like they'd be an okay place to work. Is there any company that I would just really, truly outright refuse to work for? Well, prop firm. Well, I will not work for a prop firm. So one of the things that I got going on is I'm building my own trading platform. I'm serious about this. We're going to put this out. We're going to be a whole thing. This could be a $1 billion business. I really want to ramp it up. I think we got something special here. Is it a sound business plan? I don't know. Probably not. I mean, isn't everybody kind of saying like software is dead? There's no moat. Somebody's just going to copy my software and do better. Maybe that's what happens. But I don't care. I'm going to go forward with it. And one of the things is that I know that my chances of success go up with the more people that get involved. You know, if I can get somebody that's really good at doing business to consumer sales to help me, that would really help. If I had people that help me make the content faster and better, that would help. If I even had other people that were helping doing the programming, that would help. So anybody that would come along, that'd be great. I'd like to get other people involved. And then when I come across somebody local and they're like, oh, I'm doing this thing or I'm doing that thing, it always turns into, in my mind, the argument that I'm having in my mind is their idea sucks. They should just give up on their idea and join me. Every freaking time. You have to, you can easily break somebody's leg, so it has to be strict. But it's not strict. Like, if that's the case, then shouldn't it be if you sweep somebody's leg or you cause somebody to fall down, then it's a yellow card, period? But I see all of these situations where they're like, oh, they tackle somebody. And it's like, oh, actually, that one was okay. Good job. Well, like, what's the difference? Yeah, you can only tackle them from the front, right? I think that's the rule, is you can only tackle them from it. So let me approach this a different way. In Olympic weightlifting, we have 2 lifts. We have the snatch and the clean and jerk. And we used to have 3 lifts. The 3rd lift was the overhead press, which actually is a really, really good one to add into the mix. Because it's actually upper body where a lot of Olympic weightlifters will be weak. Because it's almost all posterior chain stuff, the traditional lifts, and all of that explosiveness comes from your posterior chain. So to balance it out, shouldn't it be some sort of upper body exercise? And I think that a strict press is a pretty good one to stick in there. That's the one that I'm most interested in doing and building up and stuff. Well, they got rid of it because it was too hard to judge. Basically, that you can do things and it doesn't actually stay a strict press. Then there's all of these issues where this one was it was strict and this one it wasn't, and it was too hard to officiate. It caused too much drama, so they got rid of it. They changed the rules so that it was clear. In that instance, getting rid of it. Or you go the other way, which is what CrossFit does, and they just say is we don't care that it's a strict pull-up as long as your chin goes above the bar, and then you can do whatever you want to get there. And yeah, a Kipling pull-up doesn't really help you a whole lot, but that's what they had to do for competition. So it works. But it just seems to me like soccer has kind of picked the worst middle ground on that. They don't say, well, all tackling is allowed, or no, you can't do that. Instead, they turned it into, well, if they cry hard enough, then it's a yellow card. If your foot touches somebody's body, it's a yellow card automatically. So it's just going to go to the thing that the American got called as a red card. I mean, it's not even yellow card, it's a red card, right? Why did he get a red card? I don't understand it. Actually, you know what the other thing that I find bothersome, though, is every time they're talking about a controversial call, and I'm like, okay, let's see, what are they talking about? I don't understand what they're talking about or why it's controversial. What? It's just, it seems like that the rule is too... regular people don't understand it. Like, there was that whole thing about whether the ball touched the guy or not, and it was offsides. But then I'm like, but there's another guy there's another guy further out. What is the? How is that offsides? I don't understand. See, hockey solved this problem. They made whether you're offsides or not based on a line, instead of whether you're ahead of another player. It's more clear when it's happening. Oh man, we should control Greenland instead of Denmark. Trump threatens to abandon European defense entirely unless Denmark gives up Greenland. I you know what? I honestly do believe that the world would be better off if the United States controlled Greenland. But I don't think it's ever going to happen, and I just think it's so funny that we continue to talk about this and they get so upset about it. So you know what's something I've noticed is that all of the billionaires have really gotten invested in this maker versus taker dichotomy. If you go and you create things, then you're a maker. Whereas if you're a bureaucrat or you work at a NGO or all these things, you're not actually making anything. You're not making a profit from the stuff that you build. So you're a taker. And they are now pitting maker versus taker. And I'm seeing it's definitely a thing. I don't know if they had a conference or some talk somewhere, but they're all using the same language. They're all using the same language about makers versus takers. OpenAI a taker for sure. Okay. Oh, look, here's another. I wonder on the trading subreddits, is there like just a conspiracy to AstroTurf on psychology? So every day it's like, is it your strategy or your psychology? Well, let's read what this guy says. I've been trading golden futures for a while now, mostly ICT/SMC based, and for ages I was convinced every blown account was an issue with my strategy. Wrong model and the wrong risk management, so I tweaked the strategy, blow another account, and tweak it again. It took me longer than I like to admit to notice the actual pattern wasn't my analysis, it was in what I did after 2 to 3 losses, or so a strong week made me feel invincible. I was taking the same setup, but I'm letting my actions hinder my profitability. Started messing around with a personal project to try and build some kind of accountability structure around this for myself, basically trying to catch the moment I'm about to break my own rules rather than reviewing it after the damage is done, still early. And mostly just me figuring out what actually helps versus what's noise. Curious if anyone can relate. How do you make yourself accountable when trading to stop me? Yeah, dude, you're trading ICT. It's the fucking strategy. Yeah, I just like if I had hair, I would rip it all out. That's why I don't have any hair anymore, guys. It's because of stupid people on Reddit that are just absolutely convinced that this dumb strategy that some influencer with absolutely no credentials came out and that we can prove empirically doesn't work, but they're a true believer in it, and it must work, so it's got to be my psychology. Ah. Built is basically my soul doesn't believe the strategy works. I don't know. I mean, I think maybe a lot of the time that is what tilt is. Yeah, is you don't think that the strategy works and you want to change things. Do you have a course? No. Someday I might write a book. Here's what's going to happen. I'm building my own trading platform because the tools that are available to retail traders are not powerful enough to do the things that we need to do. We can build our own trading platform. You guys are all going to buy it. You're going to use all that money to advertise and hire more developers, compound and turn it into a multi-million-dollar business. And then once it's become a multi-million-dollar business, my venture capital investors are going to say, Seth, we really think that in order to grow this business further, that we need you to step down as CEO and COO and everything, and let some people with some more experience kind of guide the company. And I won't have any choice because, you know, they'll have so much ownership in the company at that point. And so while I will still help guide the direction and culture of the company, that will give me time to stay at home and write my book, A Day Trader's Handbook, that provides you everything that you would ever need to know about day trading that actually helps you. And it'll be thick. It'll be a big, thick book like this. And it'll be an expensive book. I'll charge you hundreds of dollars for it. But it'll be a book and you print it out. That's what ruined Apple. Yeah, he got forced out. But you know what? He was. I think that oh man. When Steve Jobs was ousted, they had every reason to do it. I think that they were totally right to push him out. It was an autistic person that didn't really know what he was doing and didn't have a clear vision. Anyways, so I don't have a course, but you can watch my order flow video series, which is completely free. And that is the best order flow learning resource on the internet. Like straight up the best. Yeah, maybe he would have ruined it himself. Yeah, well, his Lisa was a disaster, right? It's funny. I watched the Steve Jobs doc, the one where with Jared Kushner, right? Dude, I'm watching this movie because I've always known, like, you know, Steve Wozniak, he's on the spectrum, right? This is this guy, and I know these people, like, right? They don't shave, and they just love the technical stuff, and they often don't realize how amazing what they've done actually is. And then, you know, Steve Jobs comes along and harnesses that and makes it a multi-million-dollar company. Almost like he took advantage of the neurodivergent person, because, you know, he didn't tell the first project they worked on at Atari, he didn't tell him how much he was actually making, kind of, even though Woz did all the work, right? Took advantage of him. But then I'm watching this Jared Kushner video, and, you know, it's towards the end of the movie. And like Steve Jobs is walking around like this, you know, like he literally walks everywhere like this, and he constantly paces around Apple headquarters and stuff. And when it got to that point, I was like, holy shit, Steve Jobs had untreated ADHD. Well, maybe it was treated. Maybe he had Adderall. I don't know. But he had my kind of ADHD. I'm not the Steve Wozniak type. I'm the Steve Jobs type. I'm like if you took Steve Jobs and made him more technically competent and gave him Adderall. That's me. That's me. Why didn't I see it before? What do you think of John Grady from No BS Day Trading? Well, so I don't know how profitable he is or any of that kind of stuff, but I really love his book. I really love his book. I think if you read his book and you just try trading those signals that he has in his book, you're probably not going to be profitable. But I still think it's a very, very valuable book. You know, it kind of gives you all of the basic things that you need to know to get started, and it helps you understand the game that's going on and what tends to happen. So it's a really, really good start, and it's reasonably priced too. But I've never done like his webinar or anything like that. I kind of question whether the webinar is actually worth it. I was going to say, you probably know more about the technical details. Yeah. Well, I mean, it's not like Steve Jobs didn't know the technical stuff. He did. He just wasn't as strong as Wozniak was. Maybe I actually am. I don't know what I was going to say. My Woz is ChatGPT apparently, or Claude. When our trading platform makes it big and we're a multi-million-dollar business, people are gonna say Seth's co-founder was Claude. I didn't vibe code it. I knew what I was doing, but I definitely wouldn't have been able to do it without Claude. Which worries me. Like, does that mean somebody else can do it? But then I look around and everybody that's trying to do something like this, they're doing something else that I think is dumb. You know, it's like, oh, we should have a quant platform, so they make it a web platform and $600 a month, and they don't realize that your primary audience can't afford that. Is your trading style similar? I would say so. I mean, I started with John Grady. You can see I have the 3 treasuries up the way that he does and all those sorts of things. If anything, I think that the stuff that I teach is really an addendum to basically I learned John Grady and then I found that it wasn't enough. And here are the things that I wish that I had been taught that I think would have gotten me there faster. And it's not that John Grady doesn't talk about those things. It's just he doesn't really have a good framework. He just kind of stuffs it all into, well, it's just context. It's all context, and he puts it all into this big category. Whereas we've been able to, split it into the different things that matter and combine it with empirical information and show it, because he was doing this like a real prop firm before those kind of all blew up, right? Where they were doing order flow trading, and back when you could literally market make, because the robots weren't there yet, right? Before the market changed. So like he's teaching real stuff that he learned from other people, right? But the problem is that the robots came along and replaced them. And most of those guys that got replaced, I don't think that they really understand the way that the robots work very well. So, that's kind of what I'm filling in for you, is this is what the robots are doing. They're looking at correlations and managing their inventory and pulling based on, when they don't think it's a good trade. And then there's the other group of people that are the ones that they have to buy or sell a lot of something. And I think the big takeaway there is that those guys, they're so big that it takes them all day to execute. So if you can identify them and what the imbalance is there, you can just hold it. Do the AI terms of service give them any rights over products produced? No, I don't think so. That would be a problem if it did. Now, so like a key thing with my platform, I really don't think that anybody else is going to make it, because even if they had the same general concept, I don't think that they would make the same technical decisions. And it is a combination of technical decisions that really makes it valuable, and that I don't think anybody else will duplicate. Like, I think that what will happen is we'll put our platform out and it will start doing really, really well. And all of the platforms will be like, oh gosh, guys, we got to, this guy is killing us, so we got to do something. And they will try and, you know, vibe code their platforms to match what mine is doing. And it won't work because they have fundamental decisions built into the very inception of their platforms that prevents it from working. That's all on the order. Yeah. Well, everything about the order flow side of things, right? So the thing is that there's really 7 things that you need to learn. Okay. And you just keep this document here all the time. You need to understand the news, the specifics of your instrument / market, correlations, volatility, options kind of stuff, order flow, macro narrative, and risk management. So these are 7 things. Order flow is one of them, right? But I truly am the expert in order flow. You watch my order flow video series, you will learn more about what's going on and how what are the actual behaviors that are visible in order flow that are like proven, rather than just, this was passed down, or this is a theorized setup or something like that. Actual proven information, right? You will not get that anywhere else. So those last few videos in that series, because the first few videos are just like helping you understand what you're looking at and what kind of tends to happen. And then I come in and I tell you, okay, this is the empirically proven behavior, and here's why it behaves that way, right? And the kind of the high level conclusion that you get from all of that is that as a retail trader, you're unlikely to be profitable from using order flow solely on its own. You also need to be informed. You need all these 7 things. Order flow series covers just the order flow part of it, but it is the best resource on the internet on the subject. It's free. It's here on this channel. Somebody will just show your platform to a new LLM with the prompt, build the same thing. Well, yeah, that's the problem, is that there are technical decisions in there that unless you knew what they were, I don't think that the LLM would be able to duplicate it. Right? So this is the thing that I really don't think that AI can replace, which is that there is artistry in this thing. There is millions of little decisions that you have to make, and the LLMs aren't going to make the right ones. So you could vibe code it, but they're going to get key details wrong, and you can end up with a much worse platform. You'll end up with a memory hog that's constantly shifting memory around and is slow. It isn't as slick, and all these sorts of things. I don't know. One of the things I've been wondering to myself is, should I price it cheap? I think I can, but I need to like do a further analysis, because it's like right now I can, but will that actually give me enough margin for the business to grow and to become, because there's all sorts of regulatory and business things that come up once you really start growing, right? So I need to figure that out and to figure out what I need to price it at. But I do feel that because it costs less for me to develop the platform in the first place, that I should be able to offer it for cheaper. So that is a consequence of it. But I still don't think that you would have to know. Like, I could give you like the 5 or so key technical decisions, and you gave that to an LLM, and then maybe you could vibe code it. But then the other thing is that to get all of the features, it would probably take a week's worth of tokens, right? It's a big project too. I think Sierra will make an eye. Well, yeah. I'm telling you, once our platform shows it done effectively, all of the other platforms will scramble to try and prove that they can do it too, but they won't be able to do it as well. Because there's things about Sierra charts and fundamentally how it works that will make those things difficult. Vital. I personally don't believe in Rust's future. It has the same vibes as Ruby in the 2010s. You know, about 5 years ago, I would say, you know, I kind of see that too. And I'm unsure whether it will be successful in the long run or not. I just kind of enjoy it. But since the advent of AI, it's really changed, man. A lot of the things in the Rust ecosystem that were kind of holding it back have resolved themselves. So you can really truly make anything that you need to with it now. And there's a real advantage to it. That whole paradigm of the compiler won't allow you to do certain things that really it is advantageous in the world of AI. Like the LLM straight up programs in Rust better than it does Java. It understands the code in Rust better than the code in Java. It's just all of this is it's really, really wild. And people are going to figure it out. And I think Rust is just going to continue to grow. And like the, you know, the mad dash, like peak Rust popularity is yet to come, and it's imminent. You're gonna see a mass of people all of a sudden jumping in and trying to do things in Rust, because the big thing holding Rust back was the complexity of it was a barrier to entry, and LLM dissolves that entirely. People start using the LLMs, and then they realize, oh, you know what? It wasn't as bad as I thought it was. It's just you have to use really complicated frameworks to do anything. But the language itself is actually, in many respects, easier to use than other languages. Serious. All right, gonna make it all the way back to 17. It's been a slow grind back up, but it has been going. And oil has shown a lower high rather, so maybe oil is done for now. So where can I learn the other 6? I have videos about the other 6, just not full series about them. They're scattered throughout other videos. So I want to make the next video that I'm going to make is going to be, because I thought, like, the thing that this came about was somebody said, oh, I want to learn. Oh, well, everything's on this channel and yada. But like when I really started going through it, I realized, like, yeah, but it's not organized very well from the perspective of, you know, if I need to learn everything about Be Holistic. It was always just watch the Order Flow video series and then come into the stream every day and listen to what we're talking about. Yeah, that is the best way to learn, but I have other videos that are useful on there. It's just not organized very well. So I'm going to make a video. It's going to be, here are the 7 things. Here's kind of the reason why. And mentioning the videos that talk about those sorts of things to go and look at. And then I think I will go back and I will make specific videos on each of those subjects that tries to go into more depth than the existing videos that I already have. I think part of it is that a lot of the stuff that I've done was kind of like I'm going to show you what's going on and where to look, but there's some study that you're going to have to do on your own. Which there is a lot of that. I'm sorry, there's just in real trading, some of this stuff is really deep and technical, and it just does not work well in video. Video is not the way to learn it. You gotta like pull out a textbook. But I can go into more depth than I have on some of the videos. So that's the next set of videos, I guess. So for a while there, I was kind of like, I'm not sure what kind of video I should make next. But any time that I would have to like write a video, I've been working on the platform. And I really do want to get some of these things done. Get this licensing. Hopefully I get some time today to fix licensing. And then I need to do web scraping for a volatility indicator. And then I need to do spreads. And once I have that, and sessions, did I say sessions already? Then I have everything. I think I can start deprecating NinjaTrader in my work. And then I'll probably switch to doing a little bit more deep analysis on the business side to decide, do I actually need execution before I make it a product you can buy, and what the pricing should be and all that. And the launch materials and the promotion of it and the videos for it when it launches. And Seth will decide when my trading ends. So is that what it is? The kind of move that we got today in treasuries is like honestly my least favorite kind of a move. I like when it goes zoop, and I know I'm like right here and I'm like, yep, it's gonna be a down. I go short and then I get out here. That's an ideal trade for me. Need to do it with an arrow. Oh, that's not right. Weird. Well, now I can't touch the... Anyways. When it does like a V, hate those. I was trading the Norton method on ES and it was working fine for me last year, but the liquidity has been so thin and whippy this year. Past 2 days, the order flow clear. Well, but you know, I would think that the book being thinner would kind of be an advantage to you with the Norton method. Increased volatility, no, but I don't know. I really like Gary. What he's telling you in the Norton method is like genuinely good information. Information that I kind of feel like is being lost amongst retail traders, and things that especially if you were new and you hear him talking about it, it all just makes sense. But if you've been stuck in this larger retail world where everybody's sharing nonsense, there's a couple of key insights that he has that would maybe be like mind-blowing to some long timers, right? So it's really good stuff, but I think that it'd be very, very difficult to really be very profitable with that method, to really get a whole lot out of it. But at the same time, I've also, one of the weird things about it is that, you know, everybody's always talks about doing it on ES, and I'm kind of like, I feel like that'd be like the worst place for it. You know, you really want some niche instrument that nobody cares about. Like, I would go and use the Norton method on like Kalshi or something like that, you know? find correlated markets on Kalshi and do stuff that way. Yeah. Could be interesting. Could be interesting. Well, it's time for me to get going, guys. What is the Norden method? It's basically market making. It's basically market making. You know, I don't want to like ruin too many of the surprises of it because it is a product that, you know, you're supposed to go out and buy. But basically, you are finding a correlated asset and you are trading the discrepancies between your instrument and the correlated instruments. And being informed by the liquidity, knowing that there's enough volume going through in order for you to get filled on both sides. Your purchase is best on the indices because you're picking off the retail participants. I just think with the indexes that like the comparable instruments that you get aren't very good. So identifying those discrepancies is kind of hard. And then there's just so much randomness anyways. At the very least, you would need a bigger wad to trade it. Although my understanding is that a lot of these market making kind of guys basically make like some, depending on what they're doing, but some of them basically make the risk-free rate of return, and it's not that great. All right. Anyways. Japan is making Tokyo too. What the? GG. Yeah. Let's shut things down. It was a long stream today. I probably should have coded, but it was some time to do it. I will catch you guys tomorrow. Wednesday. Wednesday's usually a pretty busy day of the week, and you know, after the holiday and everything. Plus, we'll have maybe some better clarity on this Hormuz thing, right? So tomorrow might be a big day. I'll see you guys then. In the meantime, stay excellent, team.